Hello everyone, thanks for tuning in today. It's Monday, March 8th after the market's closed, and I just thought I would put a quick video out. And based on what I've seen in the market, we've had the NASDAQ really choppy and down almost, I think, over 10% from its high. And that's a pretty good sign that we're in a correction. And it's also good that we're seeing the high flyers, the names, the COVID names that just ran up with no earnings or very little earnings to very high multiples. Those are all coming down pretty hard, and I like to see that. We're also seeing the more mainline tech companies coming down. We're seeing the chip companies come down. We're seeing semis come down. So it's a really good, healthy reset. What's happening too is people are taking that money and moving it over onto the big industrial names, the reopening names, the travel names, and that's okay. I think that'll work for a while, but I'm not sure that I would, again, in my last video I talked about, well, is this economy just going to reopen like magic and everybody's going to get all their jobs back and earnings are going to be perfect? And I don't think that's the way it's going to happen. And people are saying that growth is going to get discounted because interest rates have gone up, and so that is true. I agree with that. I understand finance, but I also understand that over time, when people want to find growth, they're going to go back to growth. And that is what is going to drive people back to what I think are these tech names that have sold off, and they're giving you an opportunity right now to buy. So that's what you want to be thinking about. You don't want to think about selling. You want to think about what names on my shopping list do I want to buy now, and do we have a bottom? Do we have a bottom in this correction? And that's really what you should be thinking about. And that's what I'm thinking about. And that's what I'm thinking about for clients. So think of your portfolio in those terms, into adding the positions that you like. The high flyers, if you were playing with the high flyers and now they're down, it's just going to be difficult. And that's why that is such a hard trade. It's just difficult to play in that game. And so I don't have great advice for you if you've done that. I think, it's possible if they're really good companies, you can hold on to them and they'll come back. But again, some of those names and some of the SPACs were just trading at levels that they shouldn't have been. And now we're seeing that. So unfortunately, it's a lot of pain for some people, but it's going to clean out, like I said, sort of the excesses. So for me, this is exactly the way this needs to play out. So I just want to put that out there and reassure folks that, if you have a really good list of stocks and you want to own those names, now you're getting, like Warren Buffett would say, they're on sale. And I think they're getting to a point at that 10% down from the top. We might go another 5%. It's possible because we've gone up. The NASDAQ was up over 40% last year, right? So there has to be some kind of reconciliation, and that's what we're going through. And it's normal. It's painful, but it's normal. So I just want to put that out there. I hope you have a great week, and we'll see how it unfolds. But don't give up on these really, really strong, large cap tech names.